US sanctions on Russian energy giants trigger global oil surge and market ripples. Global financial markets experienced a new turbulence on Thursday after Washington imposed sweeping sanction on Russia's leading energy firm, Rosneft and Lukoil, marking a major escalation in US economic pressure over Moscow's prolonged war in Ukraine. The US decision to sanction two of Russia's biggest oil suppliers sent crude prices soaring by nearly 5% as traders braced for potential supply disruption in an already fragile energy market. Brent crude climbed to $65.65 per barrel, while US crude surged to $61.54, reflecting the market's sensitivity to geopolitical shocks. Despite the volatility, Wall Street indices showed cautious optimism, and the S&P 500's energy sector led gains with a 1.2% uptick driven by bullish sentiment in petroleum and natural gas shares. The Dow Jones Industrial Average edged up 0.03% to 46,606.27, while the Nasdaq Composite rose 0.49% as investors digested mixed corporate earnings. Market analysts attributed the modest stock gains to a combination of strong quarterly earning and investor approval of Washington's assertive stance and against Moscow. The sanctions are being applauded by the market, particularly within the energy sector, remarked Peter Cardillo, chief market economist and Spartan Capital Securities. However, the rally was tempered by corporate setback. Shares of IBM slipped 3.7% following a slowdown in its good software division, while Tesla fell 2.5% after reporting its fourth consecutive profit miss, extending concerns over weakening margins in the EV sector. The geopolitical domino effect extended beyond US borders. The European Union unveiled its 19th sanction package against Russia, including a ban on liquefied natural gas imports, while Britain followed suit by targeting Rosneft and Lukoil. Meanwhile, China's markets rebounded 0.3% after early decline amid reports that Washington may curb AI-driven software exports in response to Beijing's rare earth restriction. US Treasury yields edged higher, with the 10-year note rising to 3.986% as investors anticipated an upcoming US inflation report. At the same time, gold prices climbed 1.28%, reflecting renewed safe haven demand amid geopolitical uncertainty. The US dollar index held firm at 98.98, buoyed by investor confidence that the Federal Reserve will continue cutting interest rates to safeguard economic stability amid global disruption. As Washington tightens the economic grip on Moscow, analysts warn that sustained energy volatility could ripple through global market, testing the resilience of an already fragile post-pandemic recovery.